Very good afternoon to you, all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 147th CP program organized by AASB of ICI for this year. As we all are aware that AASB is organizing various CP programs, various webinars on various standards on auditing. And today's topic is again very important, that is relating to SA 550 related party transactions, audit, disclosure and compliance. And in order to tackle this very important standard, we are having with us very respected, very learned, from our own chartered accountant fraternity, CA Anil Sharma ji. So on behalf of AASB of ICI, I extend my warm welcome to you, sir, on this AASB webinar organized by AASB. We are also having with us Honorable Vice Chairman of Bhiwani branch, CA Pawan Kumar Mittal ji. I am also on behalf of AASB of ICI. I extend my warm welcome to you, sir, Mittal sir, on this AASB webinar. We are also having with us very learned, very respected Chartered Accountant, CA SC Singhal ji. So I also welcome SC Singhal ji on this AASB or this webinar organized by AASB of ICI. So Honorable Chairman and Vice Chairman both are stuck up in one of the meeting. So I am taking this liberty to start this webinar. And before formally we start this webinar, I request our learned moderator of the day, CA SC Singhal ji, to please start the proceedings of today's webinar. Over to you, Singhal sir, please.
Yeah. Good afternoon. Yeah, and wish a very, very happy New Year. So, yeah, I welcome CA Anil Sharma ji and Vice Chairman of Bhiwani branch, PK Mittal ji. Today's topic is a very, very important topic that is considered in each and every aspect of the audit. The topic is today's regarding audit related party transactions, disclosures in the audit and considered in the audit. So I request PK Mittal ji to introduce CA Anil Sharma ji.
Okay, thanks. Thanks, sir. Good afternoon, all of you. सबसे पहले मैं भी है ना टॉपिक के बारे में कुछ डिस्कस करना चाहूंगा। जो रिलेटेड पार्टी ट्रांजैक्शन है ना, हमेशा ही शक के दायरे में रहती है। कोई भी टैक्स अथॉरिटी है, कोई भी स्टेक होल्डर्स हैं, इसकी जेन्युइननेस है ना, उसके बारे में हमेशा देखना जाता है कि जेन्युइन रूप से है या नहीं। आज के हमारे जो स्पीकर हैं बहुत ही लर्नड स्पीकर हैं श्री अनिल शर्मा जी। इनको 40 साल से ऊपर का एक्सपीरियंस है एज चार्टर्ड अकाउंटेंट। वह इंडियन इंस्टीट्यूट ऑफ कंपनी अफेयर्स में एडजंक्ट फैकल्टी मेंबर रह चुके हैं। साथ ही नेशनल फाइनेंशियल रिपोर्टिंग अथॉरिटी में पास्ट मेंबर रह चुके हैं। इसके साथ यूको बैंक के भी वे पास्ट इंडिपेंडेंट डायरेक्टर रह चुके हैं। श्री शर्मा जी बहुत सारे एनजीओ में एज ए सोशल वर्कर एक्टिवली इन्वॉल्व रहे हैं, जुड़े रहे हैं। और इसके साथ ही हैं बहुत सारे वो काम करते रहते हैं, सोशल वेलफेयर के काम करते रहते हैं। वे अपना एक्सपीरियंस इस टॉपिक के बारे में शेयर करेंगे। मैं हैंड ओवर करता हूं माइक श्री अनिल शर्मा जी को। थैंक यू सर।
Thank you very much and very good afternoon to all of you. At the outset, let me congratulate AASB for doing this yeoman service. I'm really very happy and very pleased to know that this is going to be their 147th webinar on. We used to think that AASB is like a very closed closed circuit committee of the institute, but the present chairman and vice chairman has really opened up this committee and has spread the message so well through these webinars. So my congratulations to them, and very ably supported by our dear Anil Lalji. So thank you very much for inviting me. Dear Pawan Mittal ji, Vice Chairman of Bhiwani branch, and CA Shiv Charan Singhal ji, who is going to moderate this session. And so I'm going to take up this, as rightly mentioned by Pawan Mittal ji, that related party transactions are very much into discussion these days in the entire corporate world, and not for the good reasons, but for so many other reasons, which I definitely going to discuss with you. So the topic today is the entire gamut of provisions relating to related party. What are the provisions? What are the compliances which are required to be made? What are the disclosures, and how auditor is going to deal with related party? So primarily, these three aspects are there, which I'm going to deal with today's webinar. So let me share my screen with all of you. Is it visible?
Yes, sir.
Yes,
Okay.
yes, sir.
So
Yes.
the topic has been devised as related parties, audit, disclosure, and compliance. And in fact, I am going to discuss with you in a reverse manner. I'm going to discuss first what are the compliances and what are the disclosures, and then we will concentrate on the audit part at the end. So as I was mentioning that, and Mr. Pawan Mittal also mentioned about this, it has been, there are a number of, in recent past, high profile and high value frauds, like ILFS, Bhushan Steel. I mean, you name Amrapali Builders, Nirav Modi group of companies, where related party transactions has been used frequently as a tool to divert the funds. This is very, I would say, very surprising. And in fact, not only these examples, there are a number of research material which is available by academia and as well as by the regulator. I mean, there's a very good report by SEBI as well as with the RBI, where they have dealt with the bank frauds, which where you if you go through those research, and in fact, it's not only in India, there's a global research material available where it has been, so the crux of this research, or I would say the conclusion of this research, is that related party transactions are first of all those transactions which are routed through the owners, management. They are considered to be the key conduits for perpetrating financial frauds. I'm not saying so, but this is the global research which has been done by academia and regulators. These reports are available on public domain, in public domain. And very surprisingly, and the examples which I mentioned about high profile and frauds where high value amounts were involved, like ILFS, Bhushan Steel, and all that. Very surprisingly, those frauds were detected by chance, or in some cases where perpetrators themselves admitted, as they had no choice at the end, and to cover up, they had no choice to explain that what has happened, and very surprisingly, in most of these cases, statutory auditors has not reported these these transactions of frauds which were through these related party transactions. So one can see these reports are all available in public domain. So I'm not going to go into the details of these cases. But the point which I'm trying to say, so this makes our topic very, very relevant. That what is there in related party transactions that corporates or businesses are in a position to exploit them for their ulterior motives.
Hmm.
if we look at again going back to the various research reports which are available in public domain, if you try to summarize them, what type of related party transactions are there where they have found frauds? I mean, it is virtually all the transaction which can happen in a profit and loss account or in a balance sheet. For example, there are cases where purchases of goods and services has been used, payments were made, but the purchases were neither either unapproved or those were non-existent. Similarly, there were transactions of sale of goods or services where receivables are overdue or sales were either unapproved or non-existent. There are number of such cases where it has been found that the funds of a company were lended to their related parties where the terms were prejudicial to that particular company, whether those were interest-free or even in some cases a very low rate of interest were being charged, and funds which were raised through banks for a specific purpose, they were used for different purposes, for giving loan to their subsidiaries and associates. Similarly, investment route has also been seen where related party through related parties investment made in those subsidiaries and associates, either those companies were loss making and the promoters were simply losing the money, putting the money into the losing propositions, or in some cases valuations were very, very improper, very low or something like that. So this way, I'm just giving you a flavor that all types of transaction, whether it's purchase, sale, lending, investment, everywhere you can see that related party transactions, frauds were perpetrated through these transactions. But let me be very clear right from the beginning itself that related party transactions are not illegal. I mean, if you allow a company to set up a subsidiary company, to allow a company to invest into an associate, to form a joint venture, so all those transactions will definitely going to happen with those companies. So technically, related party transaction not illegal, but the non-compliance with the requirement of law and not properly disclosing that these transactions has happened, and in some cases with the bad intention where they want to siphon off the funds and then they are routing the funds through those entities. Those are again also the one where we are really worried. Auditors are required to conduct a careful audit to ensure that compliances are there, and they are also supposed to report if they are not satisfied, if they find any non-compliance, and if he finds any suspicion of fraud, then again there are provisions where the auditor has to report to the respective authorities. So from that point of view, we can see the gamut of related party and their linkages to fraud. That's why Mr. Mittal was also mentioning that any related party transaction these days is being looked at as a bad thing. So coming to the now, let us come to our real subject, which is the technical part of it, and that is so the first segment of today's presentation would be relating to compliances. So first of all, what is a related party? What are those transactions which are considered as related party transactions? What are those transactions which are not considered as related party transactions? What is the process of entering related party transactions? What are the maintenance of requirement of maintaining registers of those transactions? Then in the case of a listed companies, LODR, those regulations have also talked about related party transaction in a very detailed manner. So what are those provisions? Both Companies Act as well as the SEBI regulations has put a lot of, you see, responsibility on audit committee to look after, to really take care of related party transactions, to do their due diligence in those transactions. Similarly, independent directors are also duty bound to look into the related party transactions, that those are held at arm's length and in the normal course of business and all those things. So this is the one area which I'm going to cover, which is the compliance part. Second part is going to be the disclosure requirements. So there are, as I mentioned, that there are going to be three, these disclosure requirements will flow from three sides. One is the Companies Act. Another is the LODR, SEBI regulations. Those are there. Those also have specified certain disclosures to be made. And of course, the accounting standards also requires those disclosure, a very specific disclosure to be made. And finally, we will come to the reporting requirement under for so far as the duty of auditors is concerned. How do they, what are the standard on auditings requires them to report, how they have to really perform their duty with respect to related party transactions, and what are the reporting requirement, whether under the Companies Act or these auditors report order issued under the Companies Act. So these are going to be the entire I would say area which I'm going to take devote time on this in this manner itself. Let's come to the, and then of course the fourth part, which is also important, is the what are the consequences if those related party transaction are not entered into as per the law, and compliances has not been made. Then what are those consequences which will follow, whether those are under Companies Act or under LODR? That also I am going to discuss with you. So let's start with the compliance part itself, and let us first understand. I'm sure these are some of the very, I mean, these are not new topic. You must also be knowing this for so long now. But just to recapitulate, so related party, first of all, what is a related party? So in the Companies Act 2013, if you look at Section 2, Clause 76, that defines a related party. There you can see it says that a director, his relative, a key managerial personnel, or his relative firm in which director, manager, or his relative is partner, private company in which director or manager is a member or director. This list goes on, and but there are few, and then a public company in which director is a director and holds along with relative more than 2% of its paid up share capital. Any body corporate whose board of directors, managing director is accustomed to act in accordance with this advice, direction, and instruction of a director or manager. So these some of these clauses are very abstract in nature and has to be examined, or when you are really looking at whether that party, a particular party, can be considered as related party, that will all depends on the specific case. Because when we talk about accustomed to act in accordance with advice, direction, and instruction of a director or manager, sometimes these directions may not be there on the paper, but when you look at the overall behavior of the board of a particular company, you may find that all the directions are coming through a particular person, because this is important. And in fact, I would give a lot of stress on these two terms, where when we say is accustomed to act. And then in the case of a body corporate, which is a holding subsidiary or an associate company, subsidiary of a holding company to which is also a subsidiary, and investment company or a venturer of the company. These are all terms which I'm sure when you look at the definition of holding company, subsidiary company, associate company, or joint venture, then these terms are very well defined. Some of them I'm going to also discuss with you. And very interestingly, Section 2, Clause 76 also has a sub clause there, which is the residuary, which says such other person as may be prescribed. And for that purpose, you have to look at Rule 3 of the company's specification of definition details rules 2014. There, these two more parties have been included as a related party. And a director of its holding company and his relative, a key managerial person of his holding company and his relative. So these are not there in the section, but because of that residuary subclause 9, these two these two entities are also now will be considered as related party. And see, this definition is also important from the point of view that most of the time, let me give you a very practical situation. In fact, I was reviewing a particular balance sheet of one of my junior colleague, and he wanted to get his audit report vetted by me. So when I said, when did you determine that who are the related parties? So he gave me a very interesting reply. He said, I asked the company to provide me, when I was finalizing the financial balance sheet, at that time I asked him, and then he gave me the details. And accordingly, I have examined those details. I have ensured that disclosure is there. And accordingly, wherever required, I raised questions. And then accordingly, if any disclosure was required, any comment was required to be made in my report, I have done that. So that was his very standard reply. So see, you may find it, some of you may find it okay, but let me explain you that this is not okay, because related party transaction is one information which is required at the very start of your audit. Because unless you know that who are related party, how you are going to, when your staff is, let's say, going through the transaction vouching or even looking into the transaction details, if they don't know that who are the related parties, how they are going to actually really know that what are those which are otherwise a related party, but company has not disclosed them. So the point which I am trying to make is that ensure that in the audit program which you are giving to your junior staff when an audit is started, this information on related party is very much there, and without fail they should be asked to really keep that in mind, because most of the time you find that some transaction happened and at the year end that transaction was closed also. So how do you know that? Because later stage, if it is not appearing in the financial statement, final financial statement, or even in trial balance sometime, then you would not be in a position to understand or examine those transactions. So from that point of view, this information is really important. So that's why I would say that when you are making this information, ask the company to give the entire information as per this definition in section 276 itself. Who falls into this, who falls into this, and then an exhaustive. And then, of course, there are so many other ways to really verify it. Then there is a company is also required to maintain a register where they have to take a declaration from directors. Those can also be. So point which I am trying to say is that verify that and determine that at the very beginning of the audit itself. Okay, so now let's move further. Second is, as I mentioned, that in the definition itself, related party, there are certain terms which is further defined in the act. For example, you see here a director or his relative. Who is relative? Then it is defined. Who is key managerial personnel? That is also defined. Holding, subsidiary, associate, all these terms are defined. So let's have a quick view of these entries. So for example, the relative is defined in clause 77 of section 2. There you can see any person means anyone who is related to another if they are member of HUF, they are husband and wife, or one person is related to other in such manner. And then this again a residuary clause, and that in the residuary clause, going back to rule 4 of the company's specification of definition details rules 2014, there they have given this any person is related to other in such manner as may be prescribed. So that prescription is coming from rule 4. Here you can see member of an HUF. This is again a repetition. Spouse is again a repetition, because if you see this, they are member of HUF, they are husband and wife. So both first two are there. Then father, mother, including stepfather, stepmother respectively, son, son's wife, daughter, daughter's husband, brother, including stepbrother, sister, including stepsister. So these are very specific. Don't get confused with sometime relative definition, which is as per the Income Tax Act or in any other act. So when you are looking at a relative definition for the purpose of examining related parties under the Companies Act, then you have to restrict yourself to these relationships which are defined in section 277 read with rule 4. Clause 51 defines key managerial personnel. Here again you can see Chief Executive Officer or MD, Company Secretary, whole-time director, CFO, and such other officer not more than one level below the director, who is the whole-time employee and designated as KMP by the board. If any person not more than one level below the directors, who is in whole-time employment of the company and has been designated as key managerial personnel, though he is not a CFO, is not a whole-time director, is not a company secretary, is not managing director, is not a CEO, but still he is designated as KMP and he is one level below these the director's level, then he would also be considered as key managerial personnel. So this is again a very important definition, and this particular sub clause has been added with a lot of background into it, because you see that you must have also noticed in number of cases where company is their intentions are bad if they want to do some hanky-panky. Sometimes they structure their board in such a way, they employ people in such a way, and their designations are planned in such a way that they are not covered in otherwise section 251, except in this particular clause. So that is also required to be seen. Holding company, again, there is a definition, section 2, clause 46. Holding company means a company of which such companies are subsidiary companies. So for that purpose, you have to come to the definition of subsidiary companies. Now, in subsidiary company, these are, once again, I'm telling you, don't get surprised that why I'm telling you very basic things. Why I'm saying that, you see, sometimes identification is so important that we miss whether this will fall into related party. And once we miss that, the transactions also get missed. And at a later stage, when some investigation or some forensic is carried out, then we find that they were also like a related parties. So from that angle, look at each definition very carefully. Subsidiary company definition, subsidiary company relationship comes through two ways. One is the control of the composition, and other is the voting power, which is if he exercise or controls more than one half the total voting power, or if they control the composition of the board of directors, then this definition of 287 is to be seen. Similarly, in the case of an associate company, clause 6 of section 2 is required to be seen. There you can see that it says that has a significant influence, but is not a subsidiary company of the company. And significant influence, they have, it's again a rule-based definition. It says control of at least 20% of total voting power, or control or participation in business decision under an agreement. And so under an agreement, if it is there, that they can participate in each business decision, and they control at least 20% of total voting power, then these are the examples, or these are the criteria to determine that the other company has a significant influence, and therefore, and then would be considered as associate company of that particular company. Now, these were few definitions. Now, what are the related party transactions? It is quite simple to understand that any transaction with a related party, which we have already seen, which I have just explained to you, who are the related party, are to be considered as related party transaction. But actually it is not so. Or I would say it may be so, but the Act has very carefully mentioned specific transactions which are considered as related party transactions. And for that purpose, you have to look at section 188. Now, if you look at section 188, there are 6 specific transactions which are considered, where if the transaction is entered into with related party with regard to sale, purchase, or supply of any goods or materials, selling or otherwise disposing of any buying property of any kind, leasing of property of any kind, availing or rendering of any service. So it means supply of goods and materials, rendering of any service, availing of any services, and leasing. Leasing is a very important one, and sometimes really we miss this. So please be careful about this also. Appointment of any agent for purchase or sale of goods, materials, services, or property. Such related parties' appointment to any office or place of profit in the company, its subsidiary company or associate company. Now, such related parties appointment. Related party, I have already explained to you. If any such person is appointed to any office or place of profit, whether in the company or its subsidiary company or in associate company, then it will be considered as a related party transaction governed by Section 188. Because Section 188 not only defines the transaction which are considered as related party transaction, but also explains the process which has to be adopted by the company, by the board, to enter into such transactions sometime before or sometime even post facto. All those aspects is covered in Section 188. Finally, underwriting the subscription security or derivatives of the company, that is also a transaction considered as related party transaction. Now comes the very most controversial or interesting part, and that is transaction not considered as RPTs. As I mentioned to you in the beginning itself, that all related party transactions are not illegal, because in a business you have to have sometimes business needs are there where you have to form your subsidiaries, you have to deal with the other companies which are within the same group. So therefore, Section 188 has very specifically given a carve out of all the transactions which are considered as related party transaction. And that is, it says that Section 188 does not apply relating to those transactions which are entered into by the company in ordinary course of business, other than those which are not on arm's length basis. So I would say, whatever my experience is there, that these are these words which I have just, if you look at the screen, which I have underlined, are so much important that interpreting them, sometime take you this way or the other way. Sometimes you feel that this is a company would always be claiming that the transactions are in ordinary course of business. They are not which are not on arm's length basis. And it is, and very interestingly, all these terms, ordinary course of business or arm's length basis, has not been defined in the way which it deserves. But there are a number of examples or sometimes judgments which has now more or less defined these terms. So first of all, what we are trying to say, that Section 188 does not apply to transactions entered into by the company in ordinary course of business, other than those which are not on arm's length basis. So point why this section says, it means that these transactions need not go into the process of approval of related party transactions as mentioned in the other later part of that section. So if the transaction is in ordinary course of business, and if it is other than those which are not on arm's length basis, then it need not go through the rigor of the compliance process, which is mentioned in Section 188, which I am going to deal with it later. So let's first look at see these words very carefully in the ordinary course of business and arm's length basis. What are these? So first, arm's length basis. So arm's length basis is the arm's length transaction, means a transaction between two related parties that is conducted as if they are unrelated, so that there is no conflict of interest. So one more phrase has come into it, conflict of interest. So I think we must understand that term also before we understand arm's length transaction. When we talk about arm's length basis, most of the chartered accountants who are also dealing with the income tax matters, they go quickly to those provisions which are there under Section 92E or of the Income Tax Act, where this transaction with associated enterprises, if whether they are entered in on arm's length basis, and then of course there are some methods are given. Those are considered, which are to be examined to really to prove that the transactions are at arm's length basis. And again, there is a lot of litigation in those sections also under the Income Tax Act. So let's not, but under the Companies Act, no such those methods are mentioned. It is simply mentioned at arm's length basis. So, but definitely we can take a cue from those when we are examining whether the transactions are arm's length transaction. So, but one point which we said, between two related parties, that is transaction means a transaction with two, I'm sorry, there's we have to correct this word, two unrelated parties, that is conducted as if they were unrelated. Okay, so unrelated, so that there is no conflict of interest. So this new term which has been brought in is conflict of interest. What is conflict of interest? Again, very interesting. There is no specific definition to it. But if you look at some literature on this topic, you will find that conflict of interest has been defined in a very varied manners. First, it says that conflict of interest arises when what is in a person's best interest is not in the best interest of another person or organization to which that individual owes loyalty. So there is, if that conflict of interest means, if that transaction happens, it is going to be in favor of that person and which is going to harm the other person or the organization to which otherwise that individual owes loyalty. So that's a very interesting definition of conflict of interest, way of defining conflict of interest. So, and then another way of defining conflict is conflict can occur when an individual makes or influences a decision and does so for some personal gain that may be unfair, unethical, or even illegal. So that's again, there are, you can relate this in number of cases now. When you see some reports which has come out with regard to corporate frauds, so you can make out that in some cases this conflict of interest arose because that individual made a decision for their personal gain, which was unfair, unethical, or even illegal. For example, suppose he buys a property from a company at a very low price. He sells an asset to a company at an exaggerated valuation. He transfers certain asset to himself or to a company in which he is otherwise interested. And so many examples can be there. Then financial losses are the most common repercussion of a conflict of interest. So this is, I think, very obvious. So what point which you have to keep in mind is that this term is again not a very well defined, but examples or some on case-to-case basis, it has been which has virtually created a situation where you can see what is conflict of interest. Now, third term which was there in that, it was whether the transaction was entered into in ordinary course of business. What is ordinary course of business? Once again, this has not been defined in the Act. So once it is not defined, then how to really understand what is in ordinary course of business? Once again, if you explore the definition of this particular phrase, you will get I won't say different version, but a lot of version of that. And so 2, 3 I have just pointed out here for your benefit to understand what is in ordinary course of business. One can be that anything done within its object clause must be treated to be done in the ordinary course of business. For example, if the company has an object of producing and goods and selling, and after production selling those goods, and if he sells those goods to a related party, so it is will consider that this sale is in the ordinary course of business, because the manufacturing and selling the goods is the object of the company itself. Then another very variation which came again based on some case law, it says that ordinarily course of business implies a continuous activity in carrying on a particular trade or vocation. So it means that if the company is continuously carrying on that activity, it will be considered as ordinary course of business. For example, if we take a case that company is a manufacturing company, but it is now, let's say, selling its immovable assets. Can this be considered as in ordinary course of business? Of course not. Why? Because of this definition, that it is not a continuous activity in carrying on a particular trade account. It's not the business of the company to sell property. So from that point of view, this has to be viewed that way. The activity should be a substantial part of the business of the company. Only then, substantial part, once again, the same example which I gave can be applied to this clause also. So with this, I would say that you can visualize how to really see to that when you are examining a particular transaction which has happened, whether it is in ordinary course of business or not. So you can see any of these 3 clauses there, or maybe sometime on a cumulatively also has to apply and really determine whether the transaction is in ordinary course of business. So once we have understood what is related party, what are those related party transactions, what are those transactions with those related parties which require certain compliances, then comes the compliance part, the process of entering into related party transactions. And for that purpose, you have to look at subsection 1 of section 188. So it says that these transactions cannot be entered into by a company with a related party except with the consent of the board given by a resolution at a meeting of the board, subject to certain conditions. So it means that any related party transaction can be entered into only after the consent of the board has been given by passing a resolution at a meeting of the board. So all these are important. So consent of the board through a resolution, and the resolution is passed in a meeting of the board. So these are 3 steps, and of course the transaction I have already mentioned to you, which are considered as. Then going further, because as may be prescribed is mentioned in section 188 also. So rule 15 rule 15 also further defines that what are the this rule 15 is of the company's meeting of board and its powers rules 2014. So here the rule prescribes how that transaction is required to be entered into. What are the processes? What are the steps which are to be taken into account? The very first is when the board meeting agenda in which that particular resolution is proposed is moved, that the agenda will be very, very specific, and it will contain the very detailed information on the related party transaction. Who is the related party? What is the nature of relationship? What type of transaction is going to happen? Is there a contract? Is there any arrangement? What is the nature? What is the duration? What are the material terms of the contract or arrangement? Whether any advance is being paid or received for the contract, the manner of determining the price or other commercial terms, those are also required to be mentioned in that detailed note. Whether all factors relevant to the contract has been considered. If not, then what are those factors which has not been considered and why those are not considered fit enough to be included there, and any other information which is relevant. So note has to be a wholesome note, giving the entire gamut of information on related party transaction, and the terms and conditions, the consideration involved into that transaction. The second, first is the agenda, and the second important requirement as per Rule 15 is where any director is interested in any contract with a related party, such director shall not be present at the meeting during discussion on the subject matter resolution relating to such contract or arrangement. So this is a second step which has been. So agenda, first let the board give the management give the complete detail, present before the board with while proposing that resolution, and then if any director is interested, then he would not be participating in that meeting. So what practically happens then when any directors, because board meeting discusses so many other things also. So normally in normal practice, the director who is interested goes out when these particular transactions are actually are being considered by the board for approval. Then this section goes little further. It says that though board approval will be there, it makes more strict provision with regard to certain related party transactions, where it says that there has to be a prior approval of the company by a resolution. So it means they are saying that it is only board approval is not sufficient in certain transactions, which I am going to just explain you. Those in those situations, those transactions has to be approved by the members. So it means, and then that not only member, by the prior approval of the company by a resolution. And what are those transactions? These are again, you can see here that there are 6 transactions which has been defined there. First is with regard to sale, purchase, or supply of any goods or material directly or through appointment of agent amounting to 10% or more of the turnover of the company. So it is linked to a threshold which is based on the turnover. So amounting to 10% or more of the turnover. Similarly, selling or otherwise disposing of any property of any kind directly or through appointment of agent amounting to 10% or more of the net worth. So in this case, since there's a property involved, so it is linked to the net worth. Sale, purchase, and the goods and services and material, that was linked to the turnover, and property is linked to the net worth. Similarly, leasing of property is again linked to 10% of the turnover. Availing of rendering of any service or through appointment of agent amounting to 10% of the turnover. So you can see here, sale, purchase, supply of goods and material directly or through appointment and through an agent, and availing or rendering of any service. There's a 10% or more of the turnover, and in the case of property, it is 10% or more of the net worth. Then a second category, or I would say the next fifth item is appointment to any office or place of profit in the company, its subsidiary company or associate company, at a monthly remuneration exceeding 2.5 lakh rupees. So this is with regard to appointment of any related party to the office or place of profit, whether he is being appointed as a employee, as a consultant, or whatever. So then any monthly remuneration exceeding 2.5 lakhs requires under section 188 requires prior approval of the company by a resolution. Similarly, the remuneration of undertaking the subscription of any security or derivatives exceeding 1% of the net worth. This is only in those cases where companies has gone into public issue and or rather issuing any security or derivatives. So these are the so you can see here what section 188 is doing, giving a journal for all types of transaction, one process, and for certain specific type of transaction, they say in addition to that the first process, which is the approval of the board, also take prior approval of the members before entering into such transactions. Of course, there are certain relaxation given to related party transaction, and that is with regard to government companies. It says that this government companies, this would not apply. And secondly, the requirement of passing the resolution under first proviso shall not be applicable to transaction entered into between a holding company and its wholly owned subsidiary, whose accounts are consolidated with the company and placed before the shareholder at a general meeting for approval. Because, so please mind the word here, wholly owned subsidiaries. So it means the entire 100% shareholding of that company is with the holding company. Only then it is considered as wholly owned subsidiary. And any transaction between holding company and its wholly owned subsidiary is it doesn't require to go through that first proviso, which is the approval of the prior approval of the company by passing a resolution. So these are this was the relaxation. Now I mentioned about the restriction on board member when the transaction comes and he is not he cannot participate in that meeting where that related party in which that particular person is director is interested, he cannot participate. Similarly, second proviso to section 188 subsection 1 mentioned that when it is going to the higher level, which is the approval of the members, there it says no member of the company shall vote on such resolution to approve any contract or in which may be entered into by the company if such member is a related party. So here, even in the case of a general resolution, which is the resolution passed in the members meeting, general meeting, there also the related party member who is a related party cannot participate in the. So these are the restrictions which has been imposed, and you can very well imagine the reason is that the person who himself is interested should not be the part of the approval process. Again, the concept of conflict of interest, because once he participates, there is a conflict of interest. He himself is participating in a process where he is involved. And there are two more relaxations which can be seen. Nothing contained in second proviso shall apply to a company in which 90% or more members in numbers are relatives of promoters or are related parties. In case of private companies, government companies, and unlisted public companies operating in IFSC, second proviso shall not apply. So these two exemptions are only with regard to second proviso, which I just mentioned. So there it means that in those situations, even member who is a related party can still participate in the resolution in these two situations which I just mentioned, which is where 90% or more members in number are relatives of promoter or the related parties. After looking at section 188, then section 189 comes in. So this is again a compliance requirement. So quickly telling about this. Every company shall keep one or more register giving separately the particulars of all contract arrangement to which subsection 2 of section 184 or section 188 applies. And then it says that whatever is prescribed, and rule 16 has all the prescription. What are the notices? So you must have seen MBP 4, which is the register format where all that information is incorporated. What are those companies or bodies, corporate firms, or other associated individual in which any director has concern or interest? So first, a director gives the information, and that information is incorporated, is placed into the register maintained under section 189. So that is the requirement. Similarly, not only so if you look at the content of this register, there are virtually two parts in it. One is the information of related parties. So whatever director has declared, that would appear there, that I am interested in this. These entities or in these are my relatives and all that. And second is whatever transaction which has happened with related parties, the particulars of all those contracts or arrangements which has where section 188 applies, all those are also required to be recorded in those register, and so that it is linked. So from audit point of view, when I would say that this register makes a very important piece of evidence for us to verify the related parties and related party transactions. So once again, don't wait for this register to view at the fag end of your completion of your audit. Look at the very beginning itself, so that you know that who are the parties who has to be looked at, what are those transactions which has entered into, and they have already disclosed in those. So be very specific to see those whether those are at arm's length in the ordinary course of business. There is no conflict of interest involved, and the due process of section 188 is complied with. So these are the So from register, this is important. There is section 177, which applies to specified companies. Those companies are now required to. It says that these companies are required to have a mandatorily an audit committee. So whether it is a listed company or in some cases other companies which has been prescribed, they have to have an audit committee. So once section 177 is applicable to a company, then that audit committee formed under section 177 has been given a specific responsibilities to look after the related party transactions. So it is so once a company has a audit committee, then the related party transaction first goes through section 177, and then only it goes to section 188. That is a very the most practical way of doing it. So it is the duty of audit committee to approve or if there is any subsequent modification of transaction of company with related party. As a very specifically mentioned in subsection 4, clause 4 of section 177. Now, in the case of a listed company, some more strict regulations come in because those are in public eye, those companies, and a lot of public money is involved. So listing obligation and disclosure requirement regulations, LODR, which are issued by SEBI, those specifically prescribe some additional requirements with regard to related party transactions. So first of all, they have those regulations define related party transaction again. So if you look at the definition there, it says that related party transactions means a transfer of resources, services, or obligations between a listed entity and a related party, regardless of whether the price is charged, and a transaction with a related party shall be construed to include a single transaction or a group of transactions in a contract. So here they have brought in another angle, which is whether a price is charged or not. So number of times it has been seen that just to visualize what can be those transactions, where you must have seen that a very large number of, it's a very common practice. Suppose a company has let's say a building which is using as an office. Other companies are also using the same premises as office, but no rent is being paid. Sometime we have seen certain transactions where holding companies senior employees are helping its subsidiary companies, joint ventures, or even associate companies, but they keep on drawing their remuneration from the holding company, and no financial charges are claimed from the associate or joint venture where they are providing their services. So these type of transaction are also recognized. And in fact, when you look at our accounting standard, that is also clearly mentioned there. So therefore, LODR has very rightly brought that angle also, but that's because that's an area which is again very heavily misused. So whether a price is charged or not, transaction related party, whether it's a single transaction or group of transaction in a contract. So This again, simply one transaction doesn't make any difference, or whether it's a group of transactions. That entire is to be seen as related party transaction under LODR. Now, what are those disclosure requirement or other requirements or compliance requirement which flow from LODR? So for that, you have to look at Regulation 23. What Regulation 23 says that the listed entity shall formulate a policy on materiality of related party transaction. Now, the major change with regard to related party transaction under the Companies Act and under LODR are that LODR is looking at material related party transactions. So, so they are saying that they have to make a policy on materiality of related party transactions, and that policy will define what is the threshold limit, which duly and this policy will define all the processes which are required to be carried out for to identify materiality of related party transaction, and and then this policy will be approved by the board and will be reviewed by once in every 3 years and updated accordingly. So that is the first requirement, and then accordingly all related parties shall require prior approval of audit committee. So here, because see, any company which is a listed company, I'm sure Section 177 would definitely be applying. So they would be having an audit committee there. Audit committee may grant omnibus approval for related party transaction proposed to be entered into by the listed entity. All material related parties shall require approval of the shareholders through resolution. Now, material related party transaction. So this is a term which I would be I will be explaining you. First, what it's trying to say, and another term which requires a explanation is the omnibus approval for related party transaction. Number of times you must have seen. I must have seen that a company is let's say carrying out certain transaction throughout the year with a related party, or sometime exclusively the only transaction which they are entering into is with the related party. For example, if a company, let's say, is producing something which is 100% consumed by or purchased by is a related party. So, so in that situation, number of times it has been seen that since it is some kind of a continuous contract, then the LODR has made a situation where provision where board can give a approval for the omnibus approval, which is at the beginning of the transaction itself. A transaction is the approval is given, the terms and conditions are defined, and then subsequently no prior approval is taken, because the omnibus approval has already been taken. But the only requirement is that under that omnibus approval, the details of transaction carried out by the entity, by the company, has to be taken on record by the board in the periodical in its periodical meetings. So that is the requirement of. So omnibus approval is approval which is granted as a whole at the beginning of the year itself for entering into the transaction throughout the period. And it is like entering into a long-term contract or short-term contract where all the terms and conditions are defined in advance. Price, the payment and rejections. So all the terms and conditions are defined there. So that is one. And then second term, which I thought maybe is the material related party transactions. So as I mentioned to you, material is a related materiality depends on case to case basis. So accordingly, that materiality has to be determined by the board. And once the policy is framed, so within according to the policy, those transactions requires the due process as mentioned in Regulation 23. LODR also fixes responsibility on the board as well as on the audit committee. So on the board means it clearly mentions that one of the key functions of board is monitor and managing potential conflict of interest of management, member of the board of director and shareholders, including misuse of corporate assets and abuse in related party transactions. Now you can visualize this, how clearly they have mentioned. So while carrying out a audit of a, let's say, listed entity, listed company, it is going to be auditor's responsibility to see that LODR Regulation 4, Clause 2, Subclause F, the board has actually taken care of this aspect. So it means whether they have the documentary evidence would be available from their minutes, whether they have examined and monitored the managing potential conflict of interest of management. So here they are talking about management and member of the board also, as well as the shareholders, and misuse of corporate assets and abuse in related party transactions. So all these aspects. So very, I would say, expressed and detailed responsibility has been imposed on the board of directors of a listed company with regard to related parties transaction. Similarly, role of audit committee, Regulation 18 defines that, and it very specifically mentioned that audit committee shall mandatorily review what are the statement of significant related party transactions which are submitted by the management. So these were some of the compliance requirements. Now let's looking into the timeline, let's move to the disclosure requirement with regard to related party transactions. In some of the disclosures requirement are with regard to financial statements, and some of them are with regard to annual report of the company. So for that, we have to look at 4 specific areas. One is Section 188, subsection 2 defines that what are the disclosure required. Then Schedule 3 to the Companies Act also has a very specific requirement with regard to the disclosures of related party transactions. Then SEBI LODR regulations also require certain disclosures to be mentioned, to be given in the financial statement. And of course, our accounting standards, wherever, whether it's AS 18 or in the case where Ind AS is applicable, then Ind AS 24 also requires a related party disclosure to be made in the financial statement. So this disclosure requirement appears from coming from these 4 angles. So let's look at one by one. So far as Companies Act is concerned, you can see here that Section 129, company shall attach along with financial statement a separate statement containing a salient feature of the financial statement of its subsidiary, subsidiaries or associate company or companies in such form as may be prescribed. So since a subsidiary associate company is a related party, so a separate statement is required to be made. And in fact, Section 129 also talks about the consolidation of its subsidiary holding and consolidation of subsidiaries and associates and joint venture with the holding company financial statement as in addition to its standalone financial statement. So that is a combined information or disclosure requirement which is appearing for Section 129. Similarly, Section 188 requires every contract or arrangement entered into under that section, subsection 1, which is required to be disclosed in board report, which goes to the shareholder along with the justification or entry into such contract or arrangement. And in fact, the return which is filed with the registrar of companies also has a specific reference to these reports. Schedule 3 has a huge disclosure requirement with regard to related party transactions. Whether it is long-term borrowings, short-term borrowings, if you see in both the places it is mentioned that under both heads, if these loans, borrowings are taken from related parties, those are to be shown separately. Similarly, long-term loans and advances, short-term loans and advances, trade receivables, under all the three heads, amount due by directors or other officers or any of them, either severally or jointly, with any other person, or amount due by firms or private companies, respectively, in which any director is partner or director or a member, should be separately stated. These are the requirement which is emerging from Schedule 3 itself. So non-current investment and current investment. Under both the heads, details are to be given of the names of the body corporate, indicating separately whether such bodies are subsidiary, associate, joint venture, controlled special purpose entities in which investment has been made. So again, these are all related party transaction. So under balance sheet, you can see that borrowing, advances, trade receivables, non-current investment, current investment, information relating to any balance appearing on balance appearing for relating to related parties to be disclosed separately. Similarly, you can also see that in the case of loans and advances in the nature of loan, recently new some additional information is required to be disclosed, where it says that where loans and advances, the nature of loan are granted to promoters, directors, KMPs, and the related parties, either severally or jointly, any person, that they are repayable on demand or without any specify any term or repayment period of repayment. Then what is the amount and what is the percentage of total loan in the nature of loan? This is a recent disclosure requirement which has been added. Now, you may be surprised that why this information is being asked. Once again, most of the time you see that whatever amendments are these days being made, whether in the act or in the rules, that is emerging from see any kind of revelation which has come out in the various investigations and fraud cases. So this was found out that very large number of funds are given by the company to their promoters, directors, and KMPs and the other related parties, where the repayment terms are not defined. And similarly, and it is mentioned that they are repayable on demand, and they will keep on continuing appearing in the financial statement. So technically you are, so you can always presume that whether these transactions, you are also not, I would say, this gives an indication that there might be certain reasons to be looked at why such loans are appearing and why they are outstanding for such a long time, and may force you to look into the real reason for those transactions. Similarly, LODR also requires some disclosures. If you look at the list for the listed entity, they have to have a functional website where they would be giving a basic information, including how they are going to deal with what is their policy on dealing with the related party transaction. And then annual report of the listed entity shall also contain disclosures as specified in Companies Act 13 along with related party disclosures. Then there is a Schedule 5 Part A of the LODR, which specifies the information which is required to be given in the annual report by the companies relating to. Then Schedule 5, if you look at, then there are some specific information with regard to holding company, subsidiary company, and holding company. So loans and advances, there is a loan to subsidiary by name and amount, loan advance in nature of associate, and in which directors are interested. Some same disclosure as applicable to parent company is also required to be given in the subsidiary companies accounts also. Investment by the loanee in the shares of parent company and subsidiary company when the company has made a loan or advance in the nature of loan. So these are certain information which is which LODR also requires to be disclosed in the schedule in the annual report of the company. Now coming to some more disclosure requirement with regard to our accounting standards. So accounting standard AS 18, wherever that is, this standard is applicable, as you know, some of where is accounting standards are applicable, and somewhere these are Indian accounting standard, which is Ind AS are applicable. So if you look now, one thing has to be made very clear that though the definitions are Companies Act as well as accounting standard have defined related party in a particular manner. So you have to be very clear that the definition of related party as given in AS 18 is for the specific purpose of related party disclosure. Whereas related party definition given in the Companies Act and as read with the section 188 is with regard to the compliance part. So don't get mixed up. So if you look at the definition which is given in AS 18 for the for disclosure purposes, because the name of the the name of the accounting standard itself is related party disclosure. So from it is concentrating on disclosure, has nothing to do with the compliance part. So here it says that parties are considered to be related if at any time during the reporting period, one party has the ability to control the other party or exercise significant influence over the other party in making financial and or operating decisions. So if you look at from and then they say related party transaction also they have defined that first related a transaction, a transfer of resources or obligations between related parties regardless of whether or not a price is charged. So you can see from here. So price is immaterial so long as, and then control and significant influence, if you really apply them, so you will see that here the transaction with subsidiaries, associates, joint ventures, and other entities where the substantial interest in voting power or by statute or by agreement is there, then sorry, where the company participates in financial and operating policy decision of an enterprise, but it is not a control. So once control is there, then it becomes a subsidiary, and significant influence is with regard to the associates and joint ventures, So from AS 18 point of view, the related party definition has to be looked at from that angle. And very specifically, to sum up what we have just mentioned, if we sum up, AS 18 deals with the certain related party relationships, which are holding companies, subsidiary and fellow subsidiaries. This is the one part which comes through the control. Associates and joint venture and other investing or venturer, this comes through significant influence. And then individuals owning directly or indirectly an interest in the voting power of the reporting entity, that gives them control or significant influence over the enterprise. So first is with regard to the corporate, and the second is with regard to the individual. Similarly, key managerial personnel and relative of such personnel, enterprises over which holding company, subsidiary, associate, joint venture, or individuals which are defined having control, if wherever they are able to exercise significant influence, those enterprises are also considered as related party relationship, which requires AS 18 disclosure requirements. Then enterprises owned by directors or major shareholders of the reporting enterprise, and enterprises that have a member of key management in common with the reporting enterprises. So these are for the, as per AS 18, these are the relationships which are and if you look at the AS 18, what are the transactions which are required to be disclosed? Here again, virtually the same: purchase of sales or goods, purchase and sale of fixed asset, rendering or receiving of service, agency arrangement, leasing, transfer of research and development, license agreements, finance, including loans and equity contribution in cash or in kind, guarantee and collaterals, management control, and including for deputation of employees. Now here you can see when we talk about finances, including loan and equity, guarantee and collateral, there you can see that section 188 does not cover loans and advances or guarantees and provide provision of guarantees and collateral. Those emerge through different section 185 and 186. So 188, but AS 18 requires disclosure with regard to finances, whether it's a loan or even equity contribution. So all investment as well as guaranteeing loans, providing guarantees, providing collaterals, all those are also transactions which requires disclosures as per AS 18. Coming to the next point, I think the data has been. So I would say that when we come to Ind AS 24, here also the standard is a little more, provides a better way of situation how to apply this standard. So it says that identifying related party relationships and transaction, identifying outstanding balances, including commitment between an entity, identifying the circumstances in which disclosure of the item A and B is required, and determining the disclosure to be made about these items. So it virtually gives stepwise how this Ind AS 24 related party disclosure is required to be applied with regard to disclosures. A related party is a person entity that is related to the reporting entity. So these are once again that see definition parts. So don't get confused with the definitions for compliance purposes and for disclosure purposes. For disclosure purposes, look at the accounting standard, and for compliance purposes, look at the definition as per the Companies Act as well as the LODR, as the case may be. Then the disclosure requirement shall be made separately for each of the following category. So I think that is further detailed information as per Ind AS 24. In the case of key managerial personnel, some short-term employee benefit, post-employee benefit, other long-term benefits, terminal benefits, share-based payment, these are also required to be disclosed, which are technically not there in are not to be shown separately in as per AS 18. So now looking at the timeline, let me now come to the auditor's role with regard to RPTs. If you really want to understand the role of auditors with regard to RPTs, now if you go through various reporting requirement which has come through CARO 2020, some very specific reporting requirement has been brought into the report under CARO. Technically, if you really ask me, that these were those transactions which were earlier also which were required to be examined by the auditors. And auditors must be examining it also. But if nothing was found any that there was no non-compliance, no report was being made. But now under CARO 2020, some specific reporting has been brought into our reporting mechanism. For example, if you look at para 3 clause 3, whether during the year the company has made investment in, provide any guarantee, security, or granted any loan or advances in the nature of loan, secured or unsecured, to companies, firms, limited liability partnership, or other parties. Now, see, look at this requirement. If you look at the background of this requirement, and that is that if a company has, let's say, generated funds through let's say taking loans from banks and maybe other parties or other financial institution, then a genuine question comes when you are for your own requirement, you are raising funds through loans. Then what is the need of investing that funds into other companies by giving or utilizing those funds for giving loans, secured or unsecured, to other companies? It makes a very important reason why that is required. Why company has to give when it is raising funds from others. And it makes more sense to examine Okay, if it is given, whether the terms and conditions on which such investment has been made, which guarantee has been provided, or loans has been given, or advances in the nature of loan has been given, or guarantees has been provided, whether they are prejudicial to the interest of the company or not. What is the, how do you judge whether those are prejudicial to the company's interest? Suppose the funds which a company has raised is, let's say, interest bearing. The company has to pay, let's say, around 10 to 14% interest on the loan which they have raised. Now, the same funds have been now given to a related party, let's say at a cheaper rate, or if not cheaper, let's say at the same rate. So in both the situation, a question comes, why at the cheaper rate? Why it is not considered as a prejudicial to the interest of the company? And even if at the same rate, why company has to do this? It means either company is raising funds at its goodwill and passing on those funds to other company related party, which is otherwise not in a position to raise those funds. So technically, you are exposing your net worth, your goodwill, because before the lender for a entity which is otherwise not worth considering by the lenders. So that prejudicial to the, it is definitely a prejudicial to the, if the company investment has been made. Suppose is a company where no result is coming, company is already making losses, then somebody has to say why you are investing in that company. So that has to be proved. So first of all, this process was earlier also required to be exercised, but now under the CARO 2020, specific reporting is required to be made here. And going further on the same, whether the company has granted loan in the nature of loan, either repayable on demand. If they are repayable on demand, then again, as I mentioned to you, this makes another reason why when your loan, suppose again the same case, the funds has been raised from bank and you have liability to repay them in a well-defined scheduled manner. Why you have given loan which are where there is no specific repayment schedule is mentioned, is given? How you are going to raise further funds to repay the loan in the company? All those reasons, all those questions are relevant. And if auditor provides this information, any stakeholder would be in a position to understand that company, from where funds has come, where the funds has utilized, and what are the shortcomings in those. So from that point of view, these are some very relevant information relating to related party transaction, which would be available to the stakeholders. Another reporting requirement, I would say, is with regard to clause 4 of para 3. So it says that in respect of loan, investment, guarantees and securities, whether provision of section 185 and 186 of the Companies Act have been complied with, if not, provide the details thereof. So as I mentioned to you, otherwise also, even if this reporting was not there, as an auditor, we were supposed to check whether compliance of section 185 and 186 has been done by the companies or not. But now, to be extra sure, now the regulator wants us, the auditors, to give a specific reference in its report with whether the compliance. So it means before reporting, you have no choice but to once again look at section 185 and 186. You have to look at the loans, investment and guarantees and securities which are mentioned in those sections, whether those has been given after compliance of those sections. So that is again 185, 186 are those where you can see that a lot of related party issues are there. Now coming to clause 9 of para 3. Here, this is a very so whether the company has taken any funds from any entity or person on account of met the obligation of its subsidiary, associates, and joint ventures. If so, details thereof with the nature of such transaction and the amount of each case. Now you can see here, once again, you can visualize why such reporting has been brought under CARO, because in number of cases where the bank fraud was detected and forensic reports established that the company had taken funds from other parties or from banks, and they further transfer those funds to its subsidiary, associate, joint venture, because those companies were not having funds and they were defaulting somewhere. So just to meet their obligation, they have taken funds and transferred them. So it is a clear-cut case where the company has really done something which is not prejudicial to its interest. Where the company has raised loan during the year on the pledge of securities held in subsidiaries, joint ventures, and associate companies. So give details. And this is the other side of it, the different side of it, where subsidiaries, joint venture, and associate companies have certain assets, and based on securities, and based on that, the company has raised loans. So on the so it is virtually like giving information, though it is definitely information relating to related parties. So here, on the security of subsidiary, joint venture, associate, you are raising funds. So there always be a question why you are raising loans from by pledging securities of those companies. So it means it shows that you yourself is not in a position to raise funds from your own sources, or there may be some other reasons also. So definitely when you report this, then this other angle would automatically will arise, and as an auditor you would be required to discuss that also. Clause 13, whether all transaction related parties are in compliance with section 177, 188. So again, as I mentioned about 185 and 186, similarly section 177 and 188, which were otherwise also you were required to report, but now it is more specifically you have to mention that the compliance of these sections has been made, which is relating to related party transactions only. Whether the company has entered into any non-cash transaction with directors or persons, this is again a specific clause. Number of times it has been seen that there are non-cash transaction by the company with the directors. Non-cash transaction means any transaction of buying, selling a property, or any other where cash has not been, for example, there is a barter, one asset is replaced with another, or some asset is shares are issued against that particular transaction, or something like that. So where no non-cash transactions are there, again, since those are with related party, and a lot of cases where undervaluation or overvaluation has been noticed, as I mentioned to you in the very beginning itself. So because of that, this reporting requirement has been brought in. Coming to the another 2-3 minutes, and then I'll just close onto the contravention of related party transaction, because we discussed the entire gamut of related parties, related party transactions, and the compliances which are required to be, and the disclosure requirements which are required to be given. So what happen if those are not complied with? So those are also to be kept in mind, because these are Look at subsection 4, clause 4 of section 177. It says that in case any transaction involving an amount not exceeding 1 crore rupees is entered into by director or officer of the company without obtaining the approval of audit committee, or it is not ratified by the audit committee within 3 months from the date of transaction, such transaction shall be voidable at the option of the audit committee. And if the transaction is with the related party to or any director is authorized by any other director, the director concerned shall indemnify the company against any loss incurred by it. So a serious repercussion comes through this type of non-compliance. Similarly, contravention of section 188. Here also, you can see that any transaction which is entered into without complying with the then there is a penalty which is a 25 lakh rupees in the case of a and in the case of other companies is 5 lakh rupees. Heavy penalties are there, and transactions become voidable at the option of the company, and directors are required to be indemnified against any loss if the company incurs any loss in that particular transaction. Moreover, section 164 makes a director disqualified for appointment as a director in other company. That's very severe repercussion of non-complying with section 188. Similarly, because when section 164 disqualification comes in, then vacation of office also, this is connected with the section 164. As soon as he incurs any disqualification under section 164, because of section 188, non-compliance of 188, then he vacates the office of director also. So these are some of the repercussions, and just in the conclusion, I would say that looking into the importance of related party transactions, their non-compliance leads to a lot of penalties. But in addition to that, lot of frauds and misappropriation, siphoning of funds has happened through related party transactions. This is it's not just a statement. There are facts. You look at various reports, you will find these are there. So from that point of view, as an auditor, we have responsibility, and great responsibility, and non-compliance may also, on our side also, may lead to heavy penalties, or even NAFRA is also now these days looking into these aspects, whether how auditor has dealt with these transactions, or even SFIO. All those law enforcing agencies are also looking into role of auditors in verifying, in ensuring justification of related party transaction, especially in those corporate entities which has gone bad. So from that point of view, this is an important aspect, and every auditor must take care of this in a very, very serious manner. Thank you very much.
Can you hear me? Can you hear me?
Yes.
Can you hear me, sir? Can you hear me?
Yes, yes.
Yeah.
Thank you so much, sir. Thank you so much, sir, for your wonderful deliberation. You have covered all the aspects of relating to essays as well as AS. You have covered all the aspects relating to related parties. So we have received certain questions, sir. Now we are moving towards the question answer session, and we have with us Shiv Charan Singhal ji and Mittal sir for the same. Now may I request Shiv Charan Singhal ji to please start the proceedings of the question answer session and start the questions raised by our members. Over to you, Singhal sir, please.
Yeah. Sir, first question is whether following transactions will be considered as related party transaction. First, donation to charitable trust in which one of the independent director is a trustee.
Yes.
Second, donation to charitable trust in which relative of a director is a trustee. Third, whether the above trust need to be included in the list of the related parties.
Yeah. Okay. So I think if the person who is raising this question has heard me correctly, I have very clearly mentioned that Section 188 and the requirement of related party disclosures as per the accounting standard there is some difference. So these transactions which he has mentioned may not come under Section 188, but definitely comes under AS or Ind AS as the case may, 18 or 24 as the case may be, and require disclosure. So because their price is not material, it is since the person is having control over that charitable institution to which loan fund has been donated. So definitely name of the that party as well as the transaction details would appear as a disclosure in the as per the accounting standards.
Thanks, sir. Sir, next question is whether individuals and entities are required to be included in the list of related parties if only dividend is paid and no other transactions are there with such individuals and entities.
See, first of all, we have to see whether that individual falls into the category of related party. So it is very clear. That's what I was telling, that make a list whether how an individual comes into the definition of related party. If he is a director as an individual, definitely his name will come. If he is simply a shareholder, it is not a related party. So see whether, first of all, see the definition of related party and see the requirement of disclosing who is a related party as required under Ind AS 24 or as per AS 18, and accordingly disclose this.
Yes.
Only if he qualifies to be considered as a related party, then only his name would appear there. Whether individual, whether partnership, whether or any other shape, partnership or company, whatever case.
Yes, sir. Next is, sir, is it necessary to list the related parties even though there is no transaction with them during the year?
Yes, there are certain, for example, directors, key managerial personnel are required to be disclosed even if there is no transaction with them. However, the companies in which entities with the in which directors are interested are only those which are where transactions are there are required to be disclosed.
How should related parties be verified by the internal auditors? What documents or ledgers needs to be reviewed and evaluated? How to document the same?
See, first of all, see, there are two ways to do it. One is, as I mentioned to you, as required by the Companies Act, every director at the beginning of the year itself has to give a declaration. What are those parties in which he is interested? As a proprietor, as a partnership, as a private limited company, as a and who are his relatives and where they are related and where they are holding shares and all that. So if you look at those forms, they are very exhaustive. And if the company has received those and have entered into the register maintained under Section 189, then it is the starting point for any internal auditor. So first ensure that all the directors disclose that. If that is there, that is the only starting point. And as an internal auditor, you cannot restrict yourself only to this declaration. As we always say that as an internal auditor, you always have some insights. If by estoppel, by the operation of certain accounts, you feel that these are related parties. Because you remember, I mentioned in the related party that if any party is accustomed to act, so I think internal auditor's role definitely comes there to identifying those parties, which is sometimes very apparent when you are dealing with the company on a day-to-day basis, when you are there on a very regular basis. So from that point of view, internal auditor also has a responsibility to identify those such parties.
As an internal auditor, what should be our roles and responsibilities with respect to related party transactions, terms and conditions? You may appreciate the challenges attached to such disclosures. And what would be the position in case of a non-listed company?
See, first of all, if you look at the provision relating to internal audit, it is very clearly mentioned that specified companies will appoint internal audit, and the scope of that internal audit will be determined by the management and the internal auditor. So first of all, internal auditor has to be very clear what is the scope of his internal audit, because if then comes the role of auditor. First, so far as internal auditor is concerned, if his scope is there where he has to look into internal audit related party transaction, then he has the entire responsibility of identifying the party, identifying the transaction, and reporting aspect and compliance part also. But if it is, suppose it is not in the domain of, it is not as per the mandate given to internal auditor is not related party transactions are not, then it is the prerogative of the statutory auditor to first of all to say that internal audit is not wide enough to cover the entire area, and he can point out the deficiencies, report the deficiencies in internal control from that point of view. And after that, he has a full responsibility to look into the related party transaction, because statutory auditor cannot absolve himself, whereas internal auditor can say that it was not part of my mandate.
In case of a non-listed company?
Same. I don't think there's any change in that.
Yeah. How best to check disclosure compliance status?
The best is, first of all, identify the parties. That is the most important. And you sometime, I remember now very recently there was some high court case going on. There the auditor, in particular financial statement auditor, said that I have seen these are the related parties. Then the other party, who is the the claimant party, they said there are other parties also, and he proved that there are some other additional related parties also. Now the issue come up, why those were not declared by them? Why by the nature of transaction those could not be identified, the auditors? So point which I am trying to say is that it is definitely the first primary information will come from the declaration by the directors and by the management that these are the parties where we are interested. That is a prime source. But I'm sure you also have that experience that when you look at an audit, you always find certain transactions which appears to be not in a arm's length basis, which are with a particular party. Then you say, kiski company hai bhai, who is the party and all that. So those are the trigger points where auditor has to really concentrate and look for this type of non-compliances.
If the property is sold under public auction, and if the highest bidder is the related party, is it in the ordinary course of business?
Auction means auction done by whom? If it is done by, let's say IBC, and IBC where all the disclosures are already there, and IBC, as per the IBC requirement, related party is not banned from quoting, from putting his claim, putting his bid, then there is no problem.
Prior approval is that of the board or AGM or AGM approval?
AGM approval. In section 188, those threshold, that is prior approval of the company through a resolution.
Sir, if the transaction with related parties are not on the arm's length, should we as auditors qualify our report? Alternatively, is it okay if you draw attention to the notes and that they are not on the arm's length?
No, 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 no. First of all, there are two ways to look at it. First, if you feel that it is not at arm's length, then you have to go a little more into it. Then you have to determine what is arm's length. If you are able to do that, then it is your responsibility to mention, to qualify your report by saying that this much is the difference. Right. Suppose, let's take a case. The company has charged, company has taken a loan of, let's say, company has surplus funds. If it has invested in FDR, he would have got, let's say, 6%. But he has given those funds to a related party at 4%. So you are in a position to say that company has already placed certain funds in bank where it is earning 6%. Here he has given for 4%. So this difference is to my mind is the gap which they would have earned. But if you are not in a position to do that, then you must give a disclaimer that this transaction is there, yet you are not in a position to determine and it is not any inviting any attention or anything. It has to be as a qualification. Qualification or disclaimer straight away. So SA 705 has to be looked at.
Mittalji.
Our Vice Chairman of the Rudwani branch, Shri Pawan Mittalji, may I request sir to please raise the queries which you have received from members.
Hello, हाँ सर.
जी.
सर जैसे when person is independent director of two companies.
जी.
Which are these companies are related? Which is the?
It is again mentioned that simply that you are a director in two companies, it doesn't make you are director. Same person is director in two companies does not make the two companies related party.
Right. If both is executive director, then
क्या?
एक कंपनी में executive director है, दूसरी में common director है जैसे,
हाँ,
एक में executive है, एक में है non executive, then
ठीक है, तो फिर नहीं होगा ना, तब भी नहीं होगा ना,
कभी नहीं होगा क्या? अच्छा, right.
तो उसको जब तक सिग्निफिकेंट इन्फ्लुएंस वो उसमें पार्टिसिपेट नहीं कर सकता है, तब तक कुछ नहीं होगा ना उसमें.
Right, ठीक है सर. So, sir, should advance given to a executive director for travel for official purpose be disclosed under AS 18 in notes to accounts in financial statement?
दोबारा से बताइए क्या चीज?
Sir, should advance given to a executive director for travel for official purpose be disclosed under AS 18 in notes to accounts? Advance given to executive director for official purpose.
Advances are, first of all, there are two ways to deal with it. First of all, when you are looking at advance, you always, when you do an audit, you always look at the subsequent period. If that advance was actually a travel advance and has subsequently been adjusted, so that part is the verification that it was only an advance. And so the disclosure would be only that so much amount is due from director towards advance. That much will go as a disclosure. But the point which I am raising here is, sometimes it happens that companies give long advances without subsequently getting adjusted in advance in travel expense. So those are different and those has to be dealt with in a different manner. Their qualification would appear in addition to the disclosure. Disclosure is one, but the point which once again I'm telling you is the for auditor, it is not simply the disclosure, it is the nature of transaction and then its impact on the financial statement. If it is found that advance has been given and not being adjusted for 2 years, so it means it is nothing but the advance in the nature of loan. And then accordingly, that area is to be looked at, why loan, why, how interest has not been charged, and all those issues will come up.
Right, sir. Sir, whether the direct examination paid to working director is falling under related party transaction
Yes.
or only under key personnel?
No. As a director, it is the related party transaction. Has to be disclosed.
Sir, one more question. The
Ji.
brother of director spouse is a proprietor in a firm situated in Dubai, and the company deals with that firm, whether it covers in definition of related party.
So related, I have also mentioned the definition of relative.
Right.
So
Director
verify
spouse.
from there, and let me not give you the clear answer. So that's why, सर क्या हो रहा है ना, वो आसान आंसर नहीं चाहिए, आप देखिए जाकर रिलेटेड पार्टी में रिलेटिव डिफाइन किया है, उस डिफाइन रिलेटिव में फॉल करता है कि नहीं करता है, नहीं करता है तो छोड़ दीजिए.
Right, ठीक है सर. Sir, one more question. Are
जी.
RPT's analysis applicable only to companies registered under Companies Act?
हाँ, related party transactions are,
Only
as far as disclosures are concerned, which are under the Companies Act, are applicable to them. But when we talk about accounting standards, when we talk about our essays, those are applicable to all. If they are
Right,
applicable to any commercial organization, there, then as per the AS requirement and as per the essay, both company as well as auditors are required to comply with AS by the company and essay by the auditors.
Right, sir. Sir, in case of firm where AS18 is applicable, provisions of income tax will determine which are related party, or we have to look at the definition under Companies Act.
If in the case of a partnership firm, the audit is being done under the Income Tax Act.
Okay,
so
right.
it means that Income Tax Act provision would prevail over there. But if there is no, see what I would say, any आपस में कोई विरोधाभास उसमें अगर नहीं है, तो then there is no problem at all. Then, but most of the time you will find there is no virodhabhas. I mean, there is no conflict between the disclosure requirement of the two act, and accordingly, because accounting standard would apply. Nowhere it is mentioned that in income tax that information as per accounting standard would not be given. There must be some situation where additional information is required to be given, but nowhere it is mentioned that you will not give. So from that point of view, all related party transaction as per the accounting standards are required to be given if auditor is giving an audit report along with that.
Right, sir. Sir, my last question.
Ji.
Suppose one of the director was the ex-partner of a firm. Who are the consultant for the present company, where the ex-partner is a director? Should it be disclosed? जहां पर क्या एक्स पार्टनर है, डायरेक्टर है, अब पार्टनर नहीं है वो, क्या उसको डिस्क्लोज करना पड़ेगा क्या?
देखिए, लिस्टेड कंपनी में देयर आर सर्टेन रिस्ट्रिक्शंस with regard to even past relationship. But if it is not a listed company, then past directors are not covered.
Right, sir.
Unless they are relative, covered through the relative definition.
Sir, what if the partners of earlier firm are relative to?
What?
What if partners of earlier firm are related to?
नहीं समझा, नहीं मैं अभी पॉइंट नहीं समझा क्या करें.
जो पार्टनर्स हैं, जो पार्टनर हैं अर्लियर फर्म के, वे रिलेटिव हैं, तो आपस में क्या होगा?
हाँ, तो कोई बात नहीं, रिलेटिव ट्रांजैक्शन के ऊपर डिपेंड करता है ना. देखिए, रिलेटेड पार्टी में ट्रांजैक्शन इज इंपॉर्टेंट. फर्स्ट ऑफ ऑल रिलेटेड पार्टी है तो कोई मैंने आपको फिर कहा, बार बार उनको भी सबको कह रहा हूं कि रिलेटेड पार्टी ट्रांजैक्शंस ऐसा कुछ नहीं है कि भाई नहीं करने हैं. ऐसा कहाँ लिखा है? तो करो, आर्म्स लेंथ पे करो. और एट बिजनेस में तो जरूरी होता है सर. बहुत सी ऐसी कंपनियां हैं, एक ग्रुप में एक कंपनी दूसरे को सपोर्ट करती है, एक का माल बनता है, दूसरा फिनिश करता है, तीसरा बेचता है. so long as there is a smooth, see, it is all the transactions at arm's length, nobody is against, and all the transactions are duly disclosed, there is absolutely no problem in related parties.
Thank you, sir. Thank you so much.
Thank you, sir, for such a wonderful deliberation, as well as you have covered more than 22 questions in this deliberation, and continuously you have spoken for 2 hours. And thank you so much on behalf of AASP of ICI for sparing your valuable time, as well as acceding to our request and apprising all our members throughout India with your expert opinion as well as your expertise on the topic related party. So thank you so much, sir. And I also thanks today's both the moderators, respected Shri P.K. Mittalji and respected Shri S.C. Singalji, for their valuable time and joining us as a moderator for this webinar. Thank you, Singal sir. Thank you, Mittal sir. Thank you so much, Anil Sharma sir, for wonderful deliberation. Thank you so much.
Anilji, and you are looking so cheerful and healthy,
Thanks.
and
Thank you,
remain
sir.
like that. Thank you.
Thank you so much, sir. Thank you, sir. Thank you, sir. Thank you.
Thank you, Praveenji, and thank you, Singal sir. Thank you.
Thank you,
Thank
sir.
you, sir.
Thank you.
Thank you.